Hi, we're right at the beginning of 2024, and it makes sense to look back at last year and understand what happened and see what lessons we can learn. Last year, global stock markets had a pretty good year, up about 10% on average, which is in line or slightly ahead of long-term expected average returns. So that's something we can be pleased about. Bond markets also had quite a good year, about 5 to 6% internationally. The only cloud on the horizon was sterling, which was strong, which means that gains in overseas assets were reduced by about 4 to 5% once you translate them back into pounds. Taking all of this into account, I suspect the average investor in the UK was up something like 6% during the year, which is pretty good. How you individually did would depend on probably what you did with three areas of the portfolio. Where you overweight the US stock market relative to other markets, because it had a very strong year last year. How much did you have in China? The Chinese stock market is quite small, but it had a really terrible year last year as the property market in China has broken. It's a big part of the economy. And Western investors are concerned about an escalation of tensions between China and the US and have been withdrawing money. So those two things combined to lead to really quite weak returns in China. And lastly, the bond market actually did quite a lot better than a lot of people were expecting. People came into the year very pessimistic. And actually, as the year went on, people became more and more relaxed about inflation. And it meant that bonds, or the riskier bonds, longer dated bonds, actually did quite well. So the more risk you had in bonds, actually the better you would have done last year. So that was also quite important. But no matter what you did, most investors probably had a pretty good year last year. I would say that there are two big questions outstanding that will determine how things go next year. And they are, will we have a global recession? And will US assets keep outperforming other global stock markets? So the recession call is probably the biggest. It always has a very big impact on portfolios. And as we start 2024, a lot of investors are actually very relaxed about that, or I would say complacent, which gives you an inkling as to where I'm going to land on this argument. So interest rates have gone up a lot in the last 2 years. They've gone from 0 to 5%. And traditionally, this has a dampening effect on the economy and will ultimately lead to a slowing and in many cases a recession. Now that hasn't happened yet, which is leading people to be get increasingly optimistic. If you look in history, we know interest rates act with a lag. That lag would be kicking in at about now based on historical averages. So I think it's too early to declare a victory and that there won't be a recession. I think it really does make sense to be quite cautious how you build your portfolio and to try and make sure you can manage that situation well. The second aspect is the US outperformance. The US had a tremendous year last year, but almost all of that excess return came from 7 companies, the Magnificent Seven, the big US technology companies. This performance wasn't driven by fundamental performance. Revenues and profits were flat to slightly down for most of these businesses. It was actually driven by a changing perception of the future, because once AI was rolled out and people became excited about that, I think people concluded that these companies would get a lion's share of the benefit of that over time, and there wouldn't be any negative consequences from them of the transition. Now, we haven't seen any of this effect coming through in revenue and profitability. The companies are already enormous. In order for the US equity market to keep on outperforming, I think we're going to need to see the fundamentals to improve quite significantly. And I personally think that's going to be quite challenging. So I'm not in any way predicting Armageddon for the US, but I would be quite cautious here. And I personally wouldn't be chasing these companies at these valuations. And that would be my advice to the average investor. Across our range of portfolios last year, we returned about 6 to 8% for our investors, depending on the risk profile. Lower risk profile, slightly lower returns, and higher risk profile, slightly higher, as they had more stock market exposure. In terms of our relative performance, we've outperformed in the lower risk profiles and very slightly underperformed in the higher risk profiles, which after many years of strong outperformance relative to the peers in our benchmark, I guess it's a tiny bit disappointing. However, in the context of how I'm looking at it as a fund manager, I'm not disappointed in last year at all. The big positions that we have are based on scenarios that haven't yet occurred. So we are trying to protect the portfolios against recession risk, and we are positioned to try and protect our investors against the risk that US equity markets may correct relative to other markets. Now, neither of those things have happened. So the fact that we've stayed in line, broadly in line with peers, I think is quite creditable. And we've done that because a lot of small changes within the portfolio have been well timed and have worked well. In particular, buying UK corporate bonds at the right time was a very profitable move for our investors last year. I think that our core thesis is sound, and I think we are well positioned. So if we are correct and what we think is going to happen does happen, we should expect very strong outperformance at that point. So I'd ask you to look at what we've done in this year in context of our overall plan. Remember that this has come after many years of significant outperformance versus the peer group, and understand that we're positioned in the way that we are for, I think, good reasons to try and generate better returns and control the risk for our clients. As always today, I've been talking about investments, so you must remember your capital is at risk. If you like the video and you want to be automatically subscribed, please click on the flying colours icon. And lastly, if there's anything I've talked about today that you're interested in, please get in contact with me directly. I'd be delighted to talk to you one-to-one. Thank you.